The U.S. stock index futures dropped into the red ahead of Thursday's open as tensions surrounding a trade dispute between the U.S. and China continue to simmer. The move in pre-market trade came after a wild couple of sessions on Wall Street on data, jobless claims, and the Philadelphia Fed's Manufacturing Business Outlook survey are both due out at 8:30 a.m. Eastern Time, followed by FHFA House Price Index data at 9 a.m. Eastern Time. On the corporate front, Darden Restaurants, Kroger, Baines & Noble, and Red Hat are scheduled to publish their latest earnings results. And in Asia, stocks closed mixed today, with China markets falling once more despite a mostly calmer backdrop after an elevation in trade tensions between the U.S. and China earlier in the week. The Nikkei 225 added 0.61%. The Australian S&P ASX 200 advanced more convincingly, tacking on 0.96%. Other major markets in the region were down for the most part. Hong Kong's Hang Seng Index dropped 1.18%. Mainland stocks declined after taking breather on Wednesday. The Shanghai Composite finished down 1.38%, and the Shenzhen Composite fell 2.13%. Meanwhile, the Kospi, South Korea's benchmark share average, fell 1.1%. And to commodities now. OPEC leaders Saudi Arabia and Russia are trying to convince fellow oil producers to raise output from July to meet rising global demand, with Iran still signaling it would support only a modest increase in supply. Russia, which is not in OPEC, has proposed producers raise output by 1.5 million barrels per day. What would all of these mean for the oil market and Nigeria in particular? Let's talk to one of the research analysts with financial derivatives company, Temitope Olubile, joining me here in the studio. Hello, Temitope.
Hello.
Thank you for joining us.
Thank you for having me.
Right, the 2018 budget, of course, was signed yesterday by the president. The assumption of 2.3 million barrels of oil production. What are the consequences of a possible deadlock in the OPEC and Russia meeting? That's on the budget.
Okay. So like you said, OPEC member and non-member countries like Saudi Arabia and Russia are pushing for an increase in oil supply to the global oil market. And this is in a bid to support the rising global oil consumption, which is projected to reach 100 million barrels per day by 2019. And so with these two price leaders on the same side, a deadlock from tomorrow's OPEC meeting will be that OPEC maintains status quo and maintains the production cuts and quotas across board. And now to the side of Nigeria, with our 2018 budget that was passed yesterday, our oil production assumption is that it's 2.3 million barrels per day, and this is including condensate of about 400,000 barrels. And so in effect, we are projecting our oil exports to be about 1.9 million barrels per day. But we must remember that we have a quota of 1.8 million barrels per day. So production would have to stay around 1.7 to 1.8 million barrels per day. But the good news is that currently oil prices are trading about $22 per barrel above our bench oil price mark of $51 per barrel. And so our oil revenue remains stable despite the budget.
The price of oil, has been very volatile in the last few days. Now, do you expect this to reduce, perhaps after agreement or failure, to reach a consensus?
Okay, so oil prices are largely driven by uncertainties and geopolitical tensions. So with this uncertainty around OPEC's meeting tomorrow, we've seen oil prices drop by about 2.7% this week alone to its current price of $73 per barrel. And so what this means is that after the meeting, we'll get a clearer direction as to to what oil prices will start to do after the meeting. So it would depend on if OPEC agrees to increase production, in which case oil prices would drop, or if OPEC maintains production cuts and quotas, in which case it would likely hover around its current price of $72 per barrel.
And we've seen Iran push for higher, price, while Saudi Arabia seem quite dovish. What's the position of Nigeria?
Nigeria, okay. So Iran, it's not surprising that Iran is against an increase in global oil supply because it's currently facing dwindling domestic oil supply after U.S. reimposed sanctions. And so now to Nigeria, we must remember that we were exempted from the production cuts. We're given a production quota of 1.8 million barrels per day, like we stated before. And so whatever the outcome from tomorrow's meeting will be, our main concern is the reaction of Brent oil prices to the decision of OPEC. So I believe that Nigeria's stand is for whatever decision would keep oil prices above $70 per barrel, and that way our oil revenue will remain stable and in a good place.
All right, let's wait and see what the outcome turns out to be tomorrow. We'll wait till Friday.
Yes.
Thank you very much for your time.
Thank you for having me.
Right, Temitope Olubile is one of the research analysts with Financial Derivatives Company. In the meantime, oil prices fell today as crude exporters in OPEC appeared to be nearing a deal to increase production. Benchmark Brent crude fell $1.10 a barrel to a low of $73.64 before recovering slightly to $73.74, down $1. U.S. light crude was 65 cents lower at $65.06. Brent reached a 3.5-year high above $80 a barrel last month, but has fallen steadily in recent weeks as Saudi Arabia, the factor leader of OPEC, has signaled to its intentions to raise production to stabilize prices. And gold prices edged up today, but hovered close to a 6-month low touched in the previous session as a firm U.S. dollar curbed gains. Spot gold was up 0.1% at $1,269. U.S. gold futures for August delivery were down 0.3% at $1,271. And away from the markets, Dubai-based Average Group has agreed to sell its Latin America, Sub-Saharan Africa, North Africa and Turkey funds management business to U.S. investment management firm Colony Capital Incorporated. The agreement comes after months of turmoil at Average in the wake of its dispute with 4 of its investors, including the Bill and Melinda Gates Foundation and International Finance Corporation, over the use of their money in a $1 billion healthcare fund. The group has denied it misused the funds. The sale is part of a provisional liquidation and restructuring as set out in a court order. Financial terms of the deal were not disclosed.